going on, everybody? Welcome back to another week and another update of the SPY or the S&P 500. For those who don't know, the S&P 500 pretty much overlooks the entire market, 500 of the most common or larger companies in the market. And this week or last week, it headed back towards all-time highs, but couldn't quite get there. We can see that all-time highs was riding at around 473.54, but we only made it to a high of 470.90, which is not really a big deal because still, when we look back at 2020 or 2021, we have had a very, very strong run, and we are just kind of cooling down before we go into January and the January effect. If you don't know what the January effect or the January boom is on the stock market, I would research it a little bit. It just shows that history repeats itself, and January happens to be a really good month for stocks across the board as investors start opening up new positions for the new year. The last month of the year is typically a little bit choppy, in which we've already seen. But we're heading back towards recovery, and new opportunities are starting to come up in different markets as new catalysts also drive markets in the electric vehicle world, in the semiconductor world, and the artificial intelligence and 3D printing. There's a lot of opportunities that came out this year. Going into next year, we're expecting to see a lot of those companies starting to boom as well. Now, in terms of the shorter term picture, or looking at just the specifics of last week and this week, the last 5 days, we can see that we had a bullish trend. We are currently heading back towards all-time highs, with the main focus at the resistance of 473.50 and then another resistance at 472. So we need to break above those 2 points for us to rally back into all-time highs. In terms of a support, we have support at 466. We have another support right here at 464 before we can come all the way down and fill the gap to 460. So these are the resistances to focus on this week, and then the supports are going to be on the bottom side. If we break below the 464 support, we can easily fill this gap down towards 460. Now, some of the driving events that can take us down or up this week are going to be primarily the Fed meeting. So we're looking at the Feds are looking to speak for 2 days starting on Tuesday, and they're going to be updating us on their buyback policy, so bond buyback, as well as their stance against inflation, and then finally if they plan on changing those interest rates anytime sooner. So markets in the last couple of weeks have been a little bit choppier than usual because of that expectation and because of the Omicron virus. You can see that we channeled all the way down to start off to end November and start off December before breaking out above that channel. So our main focus this week is that for us to stay above that channel down pattern. So as long as we're consolidating within this range, that means we're still attempting a reversal of some sort before we potentially head back to all-time highs. So I'm okay with us seeing markets kind of come down and go up like this. This is completely fine. But if we were to break below 460, then we may see a little bit of panic selling go back into the markets, and we may retest that 448 bottom. But considering we're above this channel down pattern and consolidating to the right of it and not breaking back below it, we're in good shape. We're in good hands. We're not really too worried about what's coming. A lot of people during this time, they do not know what to do because the Feds are controlling so much of the market. The market is experiencing a lot of knee-jerk reactions to what the Fed is saying, to any monetary policy updates. But that's no big deal, really. Markets in the short term will react to news headlines and whatnot, but in the long term, they stabilize based on numbers and actual company financials. So I wouldn't pay too much attention to the little headlines unless you're trying to scalp or day trade. I would focus a little bit on the longer picture, especially now that we're ending the year, and it's very unlikely that we'll see a severe market downturn during this time of year anyways. So I hope you guys found this helpful. You guys got some supports and some resistance points to focus on for the week, and you also know which is the main driving factor of the market this week, which is going to be the Fed meeting.